Hi, Crypto Jack. I stream 3 times a week on Twitch, 8:30 p.m. I usually go about 3 hours. In normal circumstances, what I'll do is spend about an hour and go over kind of the macro markets. And then I'll spend the next hour and a half to 2 hours and we'll go over stuff you want to look at. So, and you don't have to pay for it. You know, they'll form a line, but the people who do pay or tip or whatever, they'll get front of the line. But that being said, I'll typically look at whatever your coin is. And we'll just look at the charts, like just the charts. I don't care what the latest news is. I don't care what the developer said or Elon Musk or blah, 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 blah. I don't care about that. But we'll just look at just objectively, TA only, what is it saying? Are we bullish? Are we bearish or what? And we can find some gems doing that stuff. We found, what did we joke? We joked about the 100x coin and we ended up getting like a 15x just by like pure TA memes and stuff. So I hope you stick around if you're new to the stream. We have some fun. I'm gonna just put it out there right now. I have had the same rules to be macro bullish, same rules, they've not changed at all. Going all the way back to the breakdown, to the confirmation of Wyckoff distribution. Number 1 was to break the downtrend. Check, big old fat check. Number 2, retest the break or find support on a moving average. If I turn on just the 20, which is the lowest that I can find, you know, with these settings, we have not retested the 20 daily. And last but not least, in my opinion, the biggest indicator of everything, reclaim Wyckoff distribution trade range. Get back in here. Where did price just slam its head? It is because of this. I maintain my bear bias. I maintain it. I know there's a lot of bullish things. I know we've done up only we've gone up 50% in 2 weeks. I get it. This was a nice test. All it takes to get back and just go up only, because this is the implication. Is that it just goes like this. Of all the assets that I've gone back and looked through, every time price has gotten back into this range, back into what was the prior distribution trade range, when price returns to it, it cuts through it like a knife through butter. It goes straight through it. If price convincingly can close up in here, and I'm talking about like 42 to 44, get a few candle closes, start a trend, pull the moving average up into that, kicking and screaming, that kind of thing, I'm in. I'm on the bull bus. But I'm gonna very publicly put my thing down that I am not a believer. I don't believe. I'm calling bullshit. I don't believe it. Let's discuss why. It's not just about a line. A lot of people are like, oh, you bear jacking your lines. No. Let's have a little study about what Wyckoff is. Wyckoff is what got me to sell. Wyckoff is why I've been out in cash since up in here. Wyckoff is why also I am very hesitant. Let's just hear me out. Let's just have the conversation. Let's just have the conversation. And if I'm wrong, we can all laugh about it. I'll crack the wine open, give out some money. You know, it's no big deal. I'd love to be wrong. Basically, if I'm wrong and we start trending up, like, I retire. I hope it happens. But right now, I do not believe. Let's get into why. Number 1, what is Wyckoff trying to tell us? Why does he go through so much effort to discuss accumulation, distribution? Why does he go into the nuances of the tests, the range highs, the range lows, the springs? Why does he go through all these details? Why does he spend so much time on this kind of stuff? It's because there's more to it than just a cookie cutter pattern, right? It's not just like, oh, well, you just look for a downtrend break and then we're off. People want you to think that. It's a very smooth brained way of looking at this. It's really not how it works. I want to explain yet again, before I go into like further details here, what Wyckoff is trying to teach people is that there are key periods in the market cycles. The Titanic must be turned, so to speak. There are lows, and then there's a markup, there's an uptrend, and then there's a top, and then there's a downtrend, and then there's accumulation. So these trends are what are so key. Yet again, another example, big impulse moves, retests, building stairs, like we like to call it. But the trends, the actual moves, even the things between accumulation and between distribution, this is the red flag in the back of my head saying, look, I know we just went 40% in 2 weeks and that was great and all this stuff, but I feel like I should call bullshit. Here's a great example. I'm trying to show you what Wyckoff is trying to teach you. There's no better example than 2015 to 2018 Bitcoin for a accumulation, an uptrend, and a distribution cycle. These are confirmed Wyckoff accumulation, markup, distribution. This is no maybe, no kinda, no whatever. No, this was confirmed. Okay. We have accumulation, we have markup, parabolic, multi-month, multi-year run, distribution. If I zoomed in on that, we can literally draw picture perfect textbook Wyckoff distribution. From that point, we had multiple touches. Shout out to whoever's asking, is current price action reminiscent of anything else? We had multiple touches of that distribution low, and price was never able to overcome it. Followed by a downtrend into eventual accumulation. What people are trying to say right now is that we've had distribution straight into accumulation. There's no pain. We just went straight from one to the other, a single week in between. It kind of looks like it. Like if you don't understand the market psychology of what's going on, and all you do is you look for the cookie mold, and you're like, oh, here's my accumulation cookie mold, and you stick it onto the chart, and you're like, hell yeah, that kind of looks like a spring, and that kind of looks like a this and that. Yeah, okay, let's do it. What you're missing though is the bigger picture. This is not a scenario, or at least it has not been. There can always be firsts, right? I will admit that. And like I said, where I jump on the bull bandwagon is when we're back in the trade range convincingly being the key. But until then, as a student of Wyckoff, I can't just immediately jump on the belief that, oh yeah, 100%, we went straight from distribution into accumulation. And some people say they disagree, and that's completely fine. But again, like I said, I will completely change my bias once we get back into this range, right in here. And we're very close. We just slapped our head on it, okay? But once we're in that, suddenly a lot of things are different. Once we're back up in here and trending up, pulling the daily 20, doing all that kind of stuff, we're good. I'm not saying it's impossible. I'm just saying I don't believe it. I've never seen a chart that looks like this. And this is what a lot of crypto Twitter is trying to say. It is literally going from one to the other and then off again. And I have never seen that. This is Wyckoff accumulation. This is Wyckoff distribution. What people are saying is going on here is this. What if that wasn't a distribution? It was 100% confirmed distribution. There's no what if it was. The right question to be asking is, post distribution, is 28 to 30K enough? Is that enough pain? Did the whales absorb enough supply to say, okay, we're good, send it? Or are they playing games to send it down to new lows? That is the right question to ask right here. Minus 55% is no pain. No, I'm not saying it's not pain, but what Wyckoff teaches you as a student of Wyckoff, what you got to understand is when you spot distribution, it is a sign of the whales that got you from here to here are gone. They are no longer in the picture. They're out. They're done. And that is what causes all this turbulence until they're like, yeah, you know what? I'm back in now. This is good enough for me right here. Now, historically, that's been 80%, 85%, whatever. So not to say that 50 to 55% is not pain at all. The question is it enough pain? Let me give you a for instance. I have personal friends that called me and they were like, hey man, I think I'll sell everything if we crack a new low right here. That's when I'll panic sell. And we didn't hit it. All the memers, all the diamond handers, everyone who bought Doge over 20 cents is just gonna get a free next bull run when they were that close to panic selling? I don't know. Somebody asked me to go over what I put on Twitter the other day. This is a broadening channel, broadening wedge. This is just something interesting I'm watching out for. It's very ugly on the bottom with all the wicks. This is actually a bottoming pattern. So this is a sign of a bottom. So I will have on, and I will be watching intently, the 20-day moving average. So this is a point for the bulls. If this can play out, bulls win. GG bulls. We run it off the closes, the candle closes themselves. It would be something like that. I just really wanted to cover that and just to explain why I'm not a believer here. Historically, it does not match with anything we've ever seen. It might be the next thing. I'm not trading for the next thing. I never have, never will, and I've done well as is. But I am watching for what happens next. The fact that price ricocheted off the trade range low and is now doing something has me curious. I'm not trying to be perma bulljack, perma bearjack, just charts jack. Just whatever the charts are telling you, that is all I'm good for. That's all I'm here for, and nothing else. I'm not your hype man. You know, I'm not your bear guy telling you to sell.